It's everyone's favorite time of year again, tax season. Woo! Okay, in all seriousness, I hate dealing with taxes as much as the next person. Truly, there are few things I'd rather do less than poring over documents and reading tax documentation and getting all of those hundreds of details together for my tax organizer. But as the old optimistic saying goes, there's only two things in life that are guaranteed: death and taxes. So it's an inevitable part of life and business. Today, I'm sharing 9 tips and systems that you should put in place as a real estate agent. These recommendations will help you treat your business like a business and make your life so much easier come tax time. I've done it the hard way before, where it just took me forever to get my taxes done and trying to search my inbox and pull up all these different receipts. And it was just so painful and took me forever to get my taxes finally in order. This year was the easiest and least time-consuming year I've ever had getting my taxes organized, because I've finally got the systems and processes in place that have made my life so much easier. By the way, if we haven't met yet, hi, I'm Sarah Newman. I'm an agent in Charleston, South Carolina, and my mission on this channel is to help you create an enjoyable, sustainable real estate business, all without burning out. So let's get into today's topic. By the way, quick disclaimer here, I am not a CPA, I am not a tax advisor, I am not a bookkeeper. This is just me as a licensed real estate agent sharing my tips with you. You, of course, should always consult a tax professional and your own accountant to see how this applies to you in your unique situation. This is not professional, financial, tax, or legal advice, and is for educational and informational purposes only. So first of all, you need to track your mileage. As real estate agents, we are in our car a lot, and every mile that you drive for business purposes, so whether you're going into an office, all the showings that you do, listing appointments, errands that you have to do, based on your business, any work meetups, all of that can be classified as business mileage, and you get a certain amount per mile that you can write off as a tax deduction. But you have to have this physically logged. You can't just make up these numbers. And who is doing physical logs anymore? Like back in the day, they'd recommend a notebook, and every time before you drive, you put your starting odometer meter, and then when you get to your destination, you put the ending odometer meter so you know how much the mileage is. And no one is doing that. To take the time to do that and remember to do that is just way too annoying and hard and time consuming. So the best way to track your mileage is through an app. You want to make it easy. Anything you can put on autopilot is going to help you later, so that you're not having to take up brain space to do some of these simple tasks. I use an app called Mile IQ. I have for the last few years, and it's super easy. It just runs in the background, and every time that you drive, it tracks it, and then you just have to classify it, whether it's business or personal. So you swipe one direction for personal, a different direction for business, and it just makes it so easy. At the end of the day or at the end of the week, you can just go through your drives. You'll get a push notification to remind you, and you just do a quick swipe. It takes a few seconds, and then you are tracked. And then you can get this nice report at the end of the year. You just send it to your email, and it breaks down the exact mileage for your business versus for your personal. You can also set it up so that any drives that you do regularly, let's say you drop the kids off at school every morning, or you go to your parents' house a lot, whatever it is, you can classify it to always be personal, so that you don't have to classify that every single day or every single week. Same with business. If you do go into a real estate office, for example, you just know that's always business. So you can preset that, and that way it's only asking you to classify drives that you're not doing on the regular. So I'll be putting links in the description to some of these tools that I use. If you use the link in the description, you will get a free trial plus 20% off your first year when you subscribe to Mile IQ. Tip number 2 is to separate your business and personal accounts. If you've been in the business a while, hopefully you have been doing this. It's one of the most foundational things that you can do for your business. You don't want to be commingling these expenses. That makes your taxes really hard and complicated, and it just isn't easy to then figure out your business, your profit and your loss, what you're spending on these different expenses. You really need to have them siloed so that you can track everything. Again, you want to treat your business like a business. You should also have a credit card that you use exclusively for the business. So it could be in your business's name, but it could also just be, a card that gets really good rewards that you have in your name, but you only use it for business. As long as it's dedicated for business expenses, it's fine. Now, the best way to separate your accounts and to have a true business bank account is to set up an LLC. An LLC, or limited liability company, is a legal structure for a business that separates your personal and business assets and protects your personal assets from business liabilities. If you don't have an LLC yet, you can have a tax professional set one up for you, or there's lots of websites online where you can do it really cheap and easy. Bizee is one, that's Bizee. I know my brother and I just used that recently when we set up a new business. So there are multiple ways to go about it, but once you have that formation, then you can set up a bank account in that business's name. You want all of your 1099 income coming into that bank account. So as a real estate agent, of course, we're not employees. We don't get a W-2 salary. All of our commission income from our brokerage is tracked on a 1099, and that's what we get come tax season. So you want all of your income going into that account. And again, you want your expenses coming out of that bank account. In order to pay yourself, it's really simple. You just move money from your business account to your personal account, and all of that is going to be tracked. If you're an S Corp like me, that's a little bit different. We're gonna talk more about that later in the video, so stay tuned for that. We're also going to be talking more about budgeting here in a minute as well. But first, let's continue talking about tracking your income and expenses. Tip number 3 is to use QuickBooks or a similar tracking app or software to keep track of all of your various income and expenses. QuickBooks links with your bank account and syncs up, so everything is in QuickBooks, and then you can categorize it on different expenses. So you can say, this recurring charge every month is a marketing expense. Please, every month, categorize this that way. And again, you can set up these filters for your recurring charges to make that categorization really easy. And then things that aren't recurring, one-off expenses, you just go in there and you say, yes, this was somebody I paid to do my website, or whatever the cost is, you can categorize it right in there. And then come tax time, it's super easy because on your tax return, of course, you have to put different categories, right? Like what was a legal and professional fee? What was a marketing cost? What was something you did in your home office? All of that has to be tracked. So if you do it throughout the year, in QuickBooks, it's going to make your life so much easier. If you don't want to be dealing with a folder full of receipts come January, you really need to get an online system. Now, of course, we do get physical receipts for certain things. A lot of it now just goes straight to our inbox, which is great. And you do need to have a folder in your email. So for example, I just have a folder that all of my receipts go to for anything that I purchased for my business, categorized by the tax year that I paid for that item in. But then for the physical receipts, I also do keep a folder that you just have to hang on to, right, in case you ever get audited. If you want, you can take photos of those receipts and also upload them to QuickBooks in relationship to that charge. And so that way each charge does have a receipt. You can really go to town with it if you would like. But the point is, you really need to be tracking all of this, and your future self next year is going to thank you when you're preparing your tax return. The benefit too is that my CPA actually has access to my QuickBooks. So this year I didn't have to fill out my business organizer because they can just go in there and see how everything is categorized. They already know how much I've spent on all these different things. I didn't have to go back through and tally all this stuff up. It was just in there, and it made it so easy. I still have to give them information on my personal items, and we're going to talk more about all this in just a second. But the point for this is that If you have a digital tracking system like a QuickBooks, your life is going to be so much easier. It truly is amazing. I'll also put a link to QuickBooks down in the description. I personally use QuickBooks Online. Number 4 is to use a budgeting software. Now, this is a little bit different than QuickBooks. Perhaps QuickBooks has a budgeting thing in place. I don't really know. I don't use it that way. But for years, I think it's been 9 years now, that I've been using a software called YNAB. It's an acronym for You Need a Budget. I have a friend who's an accountant, and she introduced me to YNAB about a decade ago. And honestly, it's been completely game-changing for me. I started using it just personally, and now I use it for business as well. But it is a complete game changer. It helped me get so organized and intentional around my money. The whole concept is that every dollar has a job, and this tracks every dollar that comes in and every dollar that goes out. Again, you can set up multiple different accounts, so you can do it for personal. It also syncs with your bank accounts, with credit card accounts. You can really go very deep with its functionality. You can do the same on the business side, so you can truly see where you're spending all your money. And what's helpful for me is to project where your future money is going. So once you start getting these lump sum commission checks, you need to figure out, well, where does this money need to go? What can I pay myself versus what do I need in the bank for all of my expenses? And so here you can clearly, line by line, put in all of your expenses, again, both recurring and non-recurring. You can set goals. Let's say you want to set aside $100 a month to work up for a certain investment that you want to make. Whatever your goals are, you can put everything in YNAB, and each month as money comes in, you get to assign that dollar a job. So you can assign it to go towards your mortgage. You can assign it to go towards your credit card. You can assign it to go towards your YouTube editor. Whatever expenses you have, you are budgeting that money for a certain purpose. If you have debt you want to pay off, you can set goals around that. It puts all of this into one place so you can really have a good grasp on how much money you have, because it can be deceiving. You might have tens of thousands of dollars in your business bank account and it looks like a lot, but when you really look at your business and your personal expenses, you might realize that's maybe just a couple of months worth of money in the bank, and that you need to be perhaps more conservative with not making a big investment at that time. Or maybe you have 6+ months of money in the bank. YNAB will help you realize that, because you can allocate money for months and months into the future. Maybe you're allocated for all of your needs for 6 months, and then you're going, oh, I do have this surplus amount. Maybe I do want to invest this into a retirement account, or to buy an investment property, or to put more towards my personal mortgage, all the possible things that you could spend money on these days. This is going to help you know whether you have enough money to make that investment wisely, because you are budgeting as you go. I personally think it's way better than a Google Doc or an Excel spreadsheet. It's just a lot more smart with its functionality. And I personally can't ever imagine my life without YNAB. So if you want to give it a shot too, when you subscribe, you'll get a free month with my link below in the description. Number 5 is to set up an S Corp when it makes sense. Again, definitely talk to a tax professional about this, but there comes a point in time where you start to make enough money that setting up an S Corp actually makes sense and will help you save money on taxes. So when you have an LLC, like we talked about in tip number 2, you can change the classification of that LLC to something called an S Corp. An S Corp or S Corporation is simply a tax classification, or in other words, a tax election. It's not a legal structure. It simply just determines how that business is taxed at the federal and state levels. So you still have your LLC, it's just taxed as an S Corp versus a sole proprietor or single member LLC. As an S Corp, it's required that you pay yourself a W-2 salary, and that salary needs to be reasonable. So that is a bit of a gray area, but again, you want to talk to your tax advisor to ensure you're paying yourself enough money so that you don't get in trouble later on. You don't want to pay yourself $10,000 a year as an S Corp on a W-2 because that's clearly not a reasonable salary. But the reason this can save you money is because when you're self-employed, you have something called the self-employment tax. And when you're an S Corp, the business is paying half of this self-employment tax on your W-2 income, and you can write that off as a deduction. You're not restricted to only receive your W-2 salary. You can take additional draws from your S Corp as owner distributions, and those aren't subject to payroll tax. So if your net profit is high enough, this is definitely going to save you money in taxes. The downside is that there is more admin. You now have to pay for payroll and you have to file an additional tax return, which if you're paying someone to do that, of course, that costs some money. Plus, of course, you need to ensure that you're abiding by these stricter compliance rules for S Corps that the government has. So there is a cost to all of this, but the benefit does outweigh the cost at a certain income threshold. What is that threshold? Well, in the past, I had heard that an income of around $80,000 to $90,000 could be worth it. I recently heard a CPA say about $100,000. So I think it really just depends on your situation, what other income you have coming in, how high your deductions are. But definitely I'd say around that $80,000 income level, it's worth having a conversation with your CPA to see if the cost benefit outweighs the hard costs. There are also some online calculators that you can use just to kind of get an overall idea of how this may work for your personal situation. So to sum it up, electing an S Corp taxation could help you cut the cost of self-employment tax significantly if your business income is a lot higher than a reasonable salary for your work. Plus, S Corps are a pass-through tax structure, and you'll still be eligible for the qualified business income or QBI deduction, which can further lower your tax bill. In effect, you're still paying the self-employment tax, but only on the salary portion of your income instead of on all the profits that you earn from your business. Now, setting up payroll can sound intimidating. Again, I recommend having your accountant help you get this all set up. Once it's set up, it is super easy. I use a platform called Gusto. If you use my link below, you'll get a $100 bonus. I've used this for the last couple of years and it is super easy. You set yourself up on whatever salary you've determined. It runs automatically every month. At the end of the year, it generates your W-2 for you. It also automatically files other tax documents for you. And if you have other people you want to pay, let's say you have either another employee, a W-2 employee, or you have, in my case, 1099 contractors. For example, I have somebody that helps with the back end of our team who I pay as a contractor. I have somebody that helps with my social media and Instagram that is a 1099 contractor. So these people, I'm easily able to go in and pay monthly in Gusto. They're not an employee, so they're not getting, a recurring charge like a salary, but they send me an invoice for their hourly work or whatever projects we've agreed to. And then I just go into Gusto, put that in there, and it pays them through that platform. And what's great is that all of that is then tracked and it makes giving them a 1099 at the end of the year super easy. So I highly recommend Gusto. There are other payroll platforms out there. I think QuickBooks actually has one as well. So you can do your research or talk to your accountant about the best way to set that up when the time comes if you are deciding to do the S Corp election. Tip number 6 is to set aside money for taxes and pay quarterly. I made this mistake years ago when I was first self-employed, probably about 11 years ago now. I was a 1099 contractor for a company and I was young. I think I was 28, 29 at the time, and I just wasn't thinking about taxes. So when my money came into my bank, I just spent it. I didn't set aside money for taxes. And if I recall correctly, I think at the end of the year, I was slapped with about a $12,000 tax bill that I did not have the means to pay. So I was able to go on a payment plan. Eventually I paid it off. but it was a really hard lesson and I don't want that to happen to you. This is also where something like YNAB can be so great because you can ensure that every time your commission comes in, you are setting aside a certain percentage to pay your taxes. Now, if you are an S Corp and are paying yourself as a W-2, you do have taxes already coming out of your W-2 every time you run payroll. But depending on the rest of your net income, you might owe additional taxes on top of your W-2. So again, talk to your accountant. They can help you figure out about how much extra money to set aside for taxes. What I do is I put all of that money into a high yield savings account. You can open them up. American Express has one, Synchrony Bank has one. There's others out there. And that way you're at least earning a little bit of money each month on this money that you have sitting there waiting to pay the government. You do want to make these payments quarterly because you get a small penalty if you don't make your payments quarterly. You can do that online on the IRS website and in your local state if your state does have income tax. Plus, if you don't make quarterly payments on top of that, the longer you wait, I feel like the more that amount adds up, and then it just feels like all of a sudden you owe this big balance and maybe you didn't save appropriately for it and it caught you by surprise, or you're just really mad about it because now you're paying this big lump sum over to the government. I find it's just easier to trickle it over time so that it doesn't hit you as a big surprise. Again, I've done this the hard way before, and I don't want you to do this the hard way in your business. Again, you definitely need to put aside a good chunk of change every time you get a commission, especially if you're a sole proprietor and single member LLC. You're definitely not even paying taxes like you are regularly if you have an S Corp. So to be safe, roughly, I'd say put aside about 25 to 30% in taxes in another bank account so that it's not even tempting for you to want to spend it. Like I said, transfer it over to a high yield savings account. And then if you do have extra, let's say you put aside 30% and maybe your tax liability came to more like 20% after you did all of your deductions, well, then that extra 10% is your own savings account for yourself. Maybe you want to keep it in savings. Maybe you have a purpose that you want to spend it on. But either way, it's always a good thing to have extra money in the bank at the end of the day. So I would recommend putting aside more than you think you need, just so that you're never in the red. Tip number 7 is to hire a CPA. I know a lot of us have done our taxes online through H&R Block or TurboTax or these other platforms, and that's fine, especially in the beginning. But the more your business grows, the more complicated it gets. And the thing about a good CPA is that they're actually going to save you money. So even though you are spending more money for them to complete your tax returns and possibly give you advice throughout the year, I personally have found that it is money very well spent. Like I said, I personally hate doing tax paperwork. So for me, just having a CPA alone to file my taxes is a huge relief. And then worst case scenario, if in the future you ever do get audited or something like that happens, you have this person that is a professional that is going to help you. You have to look at your CPA. Not all of them have built-in audit protection plans. I pay mine a little bit extra, and that way if I do ever get audited, they are there to support me in that process. So for me, that's really nice as extra peace of mind. But then they're also there for random stuff. Like I get these tax documents in the mail sometimes, and they're just so confusing. I don't know what they mean. So I scan them, I email them over to my CPA. I'm like, what is this? Do I need to do anything? And they help walk me through the next steps, if any, that are needed based on that document. I also meet with my CPA about 2 to 3 times a year. I just pay hourly for that to check in on my business and say, here's how much I've made, here's how much I've spent. Again, that's where QuickBooks comes in because you can go look at that information easily. And here's what I'm projecting for the rest of the year. So based on that, how would you advise me to, again, help save on my tax burden? We never want to pay more in taxes than we have to, right? So what are the ways that we can help based on this year's data? So for example, last year, it made sense for me to purchase a new car. I'm going to talk more about that in a different video coming out next about tax deductions you can take as a real estate agent. But my CPA was able to crunch the numbers for me and tell me how much I was going to save on that car purchase, and it became a no-brainer for me. But before that, I was nervous. I was like, do I really want to spend the money on the car? I don't know. But once I saw the big picture, it was so helpful and made my decision making easy. If you do want to hire a W-2 employee, for example, maybe you're ready for a full-time assistant. Well, that's a big decision. There are tax implications for that. And you want somebody that knows your business to be able to help walk you through the pros and the cons of that and how to best set it up. They can also give you projections on how much you need to set aside for those quarterly tax payments like we just talked about a minute ago. And overall, I just feel like they're a great person to have in your corner for all the little miscellaneous things that come up. If I just have a small question, I email my CPA, he emails me back and answers it. It's not he's gonna charge me hourly for a quick question. It's just those bigger sessions when we sit down and look at everything that I do pay for that. But again, in the long run, I think it helps save me money ultimately on legitimate things that I do want to invest in my business or personal life. So I really think that it is a wise investment to hire a trusted CPA. It's kind of like a for sale by owner is what's coming to mind right now as an analogy. People that try to sell their homes on their own without an agent end up netting less money than if they had just hired the professional and paid for the professional fee. It's the exact same with a CPA if you have a good one that you trust that's going to advise you properly. Finance and tax tip number 8 today is to hire a bookkeeper. Now I know you're like, Sarah, there's just too many people that you're telling me to hire. You don't have to do this all at once, right? You can determine what makes sense and when in your business. But I have done all these things over recent years, and I'm just here to tell you how much easier life gets. I feel like as agents, we have a gazillion things to do every single day, right? So the more that we can put off of our plate that is not our strength or our zone of genius, the more that we can focus on what does matter. So I can focus more on lead gen and marketing and the things that bring me even more business when I have the space to do that. But if I'm taking so much space and mental power trying to manage my own bookkeeping, for example, that's time I could have spent lead generating and honestly making a lot more per hour than trying to be deep in QuickBooks, organizing everything every single week. I just feel like it's not a good use of my time personally, and I don't enjoy doing it, and therefore it becomes something that I want to outsource. So your CPA could be the same person as your bookkeeper. For me, I actually have 2 different people. My bookkeeper is an old friend of mine, actually the one that introduced me to YNAB that I mentioned about 10 years ago, and she's in New York. So she is able to do my books for me. I absolutely love her, but she is not a certified public accountant in South Carolina to file my tax returns. So I have a local person here in Charleston to help me with that. And it actually is helpful having them both because sometimes I have a question and I can actually talk to both my bookkeeper and CPA to get maybe different perspectives, or maybe they reinforce the same perspective. Regardless, it's helpful to get professional opinions on things that is not my zone. So I pay my bookkeeper a monthly fee and she manages my QuickBooks. I pretty much never actually log into QuickBooks because they manage it all for me. They will send me questions each month with some charges if they're not sure what they were and just ask me to explain it, and that way they know how to classify it correctly. They reconcile my bank accounts every single month, and they give me a P&L every single month, a profit and loss statement, which is so helpful. My bookkeeper actually sends me a Loom video every single month. It's about 5 minutes long, and she goes over the P&L and just points out certain things, maybe things that are going well, maybe things I need to kind of keep an eye on, comparing it to the year before, and just giving me an overall synopsis of where I'm at financially in the business every single month. It helps me keep a pulse on the business without having to be nose deep in it every single day. Plus, P&Ls are super helpful if, for example, you're trying to buy a house as a self-employed person. We know that can be really challenging to get that self-employed financing, and something like a P&L can really be in your favor when it comes to providing the documentation you need to the lender. So sometimes, even just for personal reasons, you might want to have a bookkeeper who is giving you a P&L, so that way you are organized when it comes to maybe getting out, different loans, whether it be for a house or something else. It's just really great to have all of that documented. My bookkeeper also helps with tax paperwork. So those contractors that I mentioned earlier that I pay, my bookkeeper actually asks them for their W-9s and makes sure that they get their 1099 from my business at the end of the year. That's just one example, but they help with that. They have access to my Gusto. So again, all of these just admin tasks that probably is not your strong suit if you're a real estate agent. It's just so incredibly helpful to have somebody else taking care of that it's getting done right. The last thing you want to do is have an oversight where you don't even know that you missed some important tax requirement, and then you're in trouble. So for peace of mind, I just really appreciate having these other professionals that are keeping me compliant and keeping me organized. Like I mentioned earlier, this year was the easiest tax year I've ever had as far as getting all my stuff together for my CPA, because throughout the year, it was all tracked and balanced and reconciled. So my CPA was just able to go look at that and have what they need. Now, I did have to spend a few hours still getting personal documents. That's just something that you're gonna have to do. You're going to have to go into your mortgage account and get your mortgage interest statement. You're going to go into your high yield savings accounts and get the interest that you've accrued, those tax paperwork documents, and need to give those to your CPA. Any other investment accounts that you have, you're going to need to provide documentation so they can get everything organized for you. You also should track your medical expenses. Some of that comes out of my business account, like my monthly premium for my health share, which is what I use instead of health insurance. But a lot of it, the out-of-pocket expenses that I have when I go to the eye doctor or the dentist or whoever, that's all paid out of my personal account. So that kind of stuff I have to track to ensure that I can still hand over to my CPA. So there is still a little bit of work that I'm doing, but by and large, the vast majority of it is already taken care of. And it's just those few miscellaneous items that I have to pull together at the end of the year, and then I get to hand it off. So should you hire a bookkeeper first, or should you hire a CPA first who is just going to do your tax returns? Again, I don't think there's really a right answer here. It just depends on you and your priorities. I personally hired the CPA first. I wanted to make sure that I was optimizing my tax returns, and I was pretty good at tracking my expenses. So even though it did take me a lot of time come the new year to go through and aggregate all that data, I did at least have the data there for me to go look at. So for me, I felt like hiring the CPA first made sense. I've actually done that for many years now because I just didn't want to mess anything up. The bookkeeper I just started with almost 2 years ago now, so that's more of a recent investment for me, but it's something I had dreamed about being able to hire for a long time, and I definitely think she's worth every penny. Okay, finally, tip number 9 today is to set aside money for retirement. When you're self-employed, no one is giving you a pension or a 401k. You have to do this yourself. Even if you just start small, that's totally fine. Start where you're at. I started saving much later in life than I wish I had, but it's just how things unfolded and I am where I am. But I remember my brother telling me years ago, even if it's just $50 a month, just put that into your Vanguard account and let that start accruing. Something is better than nothing. And over time, you can start to put away more the more that you get organized on the back end of your business. Compound interest is one of the best things that's ever been created in our financial system, so definitely take advantage of it. There are a lot of different types of accounts that you could set up. It could be a traditional IRA, a Roth IRA, a SEP IRA, a solo 401k. They all have different tax implications and rules. So again, you're really going to want to talk to a CPA or a financial planner more about this. Some are tax deductible, which is of course really nice. For example, I have a SEP IRA that I contribute towards. For S corporations, SEP contributions are an employer expense that can reduce the S Corp's taxable income passed to you. There is a maximum you can put into it, 25% of your W-2 income. For single member LLCs, your max contribution for this type of IRA is based on your net self-employment income, effectively up to about 20% of your net earnings. Now, if you have employees, not 1099s, but W-2 employees in your business, it's important to note that you also have to contribute the same amount to that person as you do for yourself. So if you have different type of retirement accounts or investment accounts, just make sure you talk to a CPA, please, or a financial advisor before you start hiring people as W-2s, because it can have impacts that you may not even be considering or have on your radar right now. Another example is the Roth IRA, which can only be used up to a certain income limit. You might eventually exceed that income limit, and then you can't contribute to the Roth IRA. It's based off of your modified adjusted gross income. And as a single person, I think that amount is $165,000. So if that is you, then you cannot contribute to the Roth IRA. But there are, again, lots of different accounts out there. You just need to know which one to leverage based on your business, based on your net income, based on your goals. And for me, this is not a strong suit. Understanding all the different investment accounts and possibilities, but then learning all the rules and trying to manage all of that. I just personally don't want to spend my time trying to figure all of that out. So I do also have a financial planner that I started working with in the last couple of years to help me with all of this. Most people I know start with some kind of IRA, often a traditional IRA. You can open up an account in something like a Vanguard, for example. You can put money in there every single month, and you just need to make sure that you buy certain stocks like the S&P 500, for example, so that that money is working for you. But it can be pretty simple just to get started with something very basic. That's what I did years ago. And there are, of course, a lot of other YouTubers and videos that can help you with that. That is not my expertise. It's just something I want to make sure I mention, because I'm sure at some point you're going to want to retire. And if you're not planning for the future, then you're going to have to be working probably much later in life than you would like to. So start where you are, start small, but definitely start. I hope you enjoyed these finance and tax tips today. Leave a comment below and let me know which one struck you the most, what you think is the most important for you in your business right now, and just let me know what you learned. It's really helpful for me so that I can continue to create content that serves you. If you did get value from this, please like the video and subscribe to the channel so that you can continue to get updates as I release new content to help you build an authentic and sustainable real estate business. Finally, if you're considering moving brokerages and you're curious about eXp Realty or eXp Commercial, I offer a no-pressure confidential call to help you talk through the opportunity and see if it's a fit for you. You can book a call on my calendar in the description below. Thanks so much for watching, and I'll see you in the next video.